Good morning, everyone. Hope you're well. It's Friday. It's the end of the week, 24th of January 2025. And what a week it's been. Trump really going for it, isn't he? Big time. Very, very strange speech to the believers in Davos yesterday. He said at one point, clean coal, coal is clean, clean coal. We just love it. Basically talking about the infrastructure, the AI infrastructure they're talking about putting together with that $500 billion deal with SoftBank and AI, OpenAI and Oracle. Some issues about power for those data centers. So he's talking about actually granting planning permission very, very quickly and making sure that they're off grid and they've got a backup supply of clean US coal. Unbelievable stuff. But anyway, they lapped it up in Davos, and the markets have lapped it up, and we continue to push higher. Record close for the stock market yesterday, and euros bouncing this morning, 103. So we've got a bit of a weaker dollar. Just a quick update on two of our trades we've had open from earlier in the week. The euro Swissy finally hit target overnight, and we've closed 80% of that as usual, and 20% is still on. We're rallying quite nicely, having had that big up candle here on the 20th. When was that? Monday? Yeah, Monday, Tuesday, Wednesday, Thursday. There we go. Thursday night, we hit our first target of 20 odd pips on that one, I think. So yeah, we're still on that. We've pulled our stop loss up to entry, so the remaining 20% can't lose. So worst we can do is flat. So, but candle size matters, guys, regardless of the asset you're trading. And we've had some big, strong, positive candles on this pair. So we were happy to take that long on Monday. The other one we had open as well, which has also hit target one, is the was it Euro New Zealand Kiwi? I get them all mixed up. They're just assets, aren't they? Don't get attached to them too much. What was it? Kiwi. Where are we? New Zealand. Was it New Zealand Swiss? It was New Zealand Swissy, wasn't it? Just bear with me a minute. Oh, we'll come to it. There it is. There it is. Same sort of pattern. Big candle on the 20th over its 20-day moving average. This was a bit more dodgy. Our stop loss was down here somewhere, wasn't it? As we'd ran to the 50-day moving average already. We couldn't break it Tuesday. Looked like it was being rejected on Wednesday and yesterday. Although these were, we see the gap we opened down on Wednesday, but yesterday was the killer as we went back, closed back over our entry quite significantly and over the 50-day moving average. So we've had a follow through overnight, probably some automated systems that trade off the 50-day moving average, triggering long yesterday, and so it's taken us to our target one. And again, we've taken 80% off that. As it's already over its 50-day, it may run out of steam, but again, we've pulled up the a stop loss to our entry, so we can't lose on that one, and again 20 odd pips on that one as well. More importantly, the big players said euros back up this morning. We just had some German PMI data, better than expected. The composites come in at 50.1 compared to 48.3, and the services number, let me just bring up the calendar for you. The services number has come in much better than expected as well. So where are we? Here's the German and French PMI data. PMI data. Their last meeting, last meetings in Davos today, and I'll come to the Bank of Japan in a minute. But let's just deal with the breaking news. Services PMIs 42.5, much better than expected. It's only, it's only one mark here, but it's a good 2% better than expected. And German manufacturing finally still woeful at 44.1, but much better again than expected at 42.7, and better than last time at 42.5. So some turnaround in Germany. Does it mark the bottom? We shall see. It's been under 40 in Germany, that manufacturing PMI, and it's something we've been watching closely. So let me just have a quick check on my other what that represents. out of Germany. Just bear with me a second. Let's see if I can share it. Doesn't want to close that. Let me just bring up Forex calendar, which shows you a nice little. See, this is the one that we've been all watching at this manufacturing number in Germany. Remember, Germany is Europe's biggest economy, significantly bigger than France and Spain and Italy, and we've. Let's see, it's not showing. It's not giving me the graph for some reason today. No, it's not. Okay, I was going to show you the graph. We'd been under 40 for manufacturing. And remember, anything over 50 needs to be over 50 to show expansion. So with the services sector, things like people doing service jobs, so people like working banks, insurance companies, tourism, all the services that people pay for, doctors, nurses, fire people, bankers, accountants, solicitors, all that sort of stuff. That's all a major part of developed economies. 80% of it accounts for GDP. So this is much more important than manufacturing. But manufacturing, obviously, German manufacturing, certainly in years past was held as a beacon for the rest of the world. Perhaps less so these days, but everybody likes their German cars, don't they? So that's been moribund for years, and it remains so as well. To be honest, it's not great at 44, but at least it's moving in the right direction at long last. So that's the breaking news. France, similar sort of numbers, except disappointingly, the services number went down, and it's still in contraction. So France in a potentially worse situation than the Germans. You saw here with just about over 40 last month for manufacturing in France. So the euro area came under a lot of stick yesterday during Trump's speech and during his very amiable question and answers for a very tame panel. Just giving him a platform, really. It wasn't really a question and answer. But anyway, he's with friends, isn't he, in Davos, business leaders and political leaders. It is the biggest economy. He's the biggest politician in the world. So metaphorically as well as perhaps physically. But, we'll see how it all pans out, but certainly, excuse me, his policies have certainly kicked off, and he's delivering what he said he would. See how much of it actually comes to fruition. Euro area in half an hour, UK in an hour, and later on today we got the important US PMI data for December and existing home sales, as well as consumer sentiment and consumer expectations. So that's where we sit currently. So let's have a quick, what everybody's more interested in, let's have a look at the charts. Let's go through them in order. So crypto, again, his opening comments was very crypto positive yesterday. So we had a big rally from 101 to 105. We're back over 105 this morning. So again, positive chart pattern here, my friends. Consolidation at highs over that key 100 level, way over the key. Big support at 92 we'd had ahead of his inauguration and actually getting the keys of the Oval Office. So we're bid Bitcoin 20-day moving average, as we said earlier in the week, over the key psychological and technical now 100,000 level. So Bitcoin is bid, crypto generally is bid on the positive spin and noises and the changes that Trump is promising for the SEC and the wider crypto and digital markets, and obviously with Elon Musk in his ear, that's just going to move forward, and other big tech titans as well, also in his ear. Oil, on the other hand, continues to decline. We went under the key $75 yesterday and under the key 20-day moving average. So this triggered a short position. Long, we'd been long here from this breakout, from this levels. Remember, we talked about these very positive setups as we were consolidating lower. The break over the 20 and the 50-day moving average played out really nicely. Couldn't quite get to $80 last week. Turned around late last week on Monday. We were down under our first key moving average and closing out our long position, and that's triggered short today overnight. I won't put it on the, I don't know, not many of you trade. I won't put it on the Discord, but that triggered short been building up to that earlier in the week. Some initial short the day before, but a big short full position as of yesterday. The break of 75, the break of the 20-day moving average, and we trade at 74.70 currently. So oil unwinding again. Comments from Trump about more energy production, obviously earlier in the week, and drill, 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 baby, as he calls it. He's very dismissive of the green agenda yesterday again in his rambling speech to Davos. But majors said all pushed back up against the dollar. So let's just go down these in turn. We'll come to the yen and the Bank of Japan in a minute. So Aussie went back to this initial December low we'd marked as this big move down. So we're back over 6.63 for the Australian dollar. It's been a good week. It's kicking off on Monday as we enter the tentative long position over on the end of day system. Again, it's one I posted. We weren't sure what was going to happen, but we've ran to the 50-day. So that has turned around, and we got this general drift up. So see if we can move forward. Some of the data this week's been good. The jobs numbers were better in Australia. Certainly the noises coming out of China hitting their GDP numbers for the year. What surprise is it? And also talking about more stimulus for the recovering stock market, or the Shanghai and the CSI indexes, and the Hang Seng as well have all benefited from that this week. So they're all ticking up, and it's helped lift the Australian dollar. Canadian dollar is back to 143.35 from this peak at over 145 earlier in the week, or last week I should say, but we're still consolidating at highs again. So we haven't breached 143 itself. So you can see that consolidation has been going on very significantly. Some big up candles originally, some two big down, significant down candles, but we couldn't, it's all in. Let me zoom that up. You can see the so that's the big down candle, but the previous, or the next 7 or 8 days was within this range. So it's this down negativity is engulfing it. The 20-day held. We tried to break higher on the 8th or 9th day. It didn't happen. Then we had a bigger down engulfing candle. So the dollar rally looks like it's maybe losing steam. So we may be looking perhaps to move more to the downside. And in the last few days, we've been more under the 20-day moving average than we have been over it. So see here, we were over it. Here last week we started testing it and moving under it. We were under it that day. We closed significantly under it here on Monday. We had a spike on the initial Canadian inflation data and retail sales data on Tuesday. Wednesday we went back over. Thursday we held, and Friday currently we're back down. So we are teetering around the 20-day moving average. 20-day average is flat. It's not trending. So we have this channel here. 143 as our big line in the sand for CAD traders. Obviously, the weakness in the oil market isn't helping the loonie. And our top sits the top was really from last week when we went to 144.75, but really a more conservative top is through there. If you're trading this channel, 144.50 is the key, where shorts are getting positioned. Euro stock markets, European stock markets are up. Futures, we all were up yesterday. S&P was up 32 points, 0.53%. New record high, 61,118 stock markets. Just popped up on my other screen over here. Sorry, I'm talking about Forex, wasn't I? Kiwi, Swiss franc. We've been short the two, and but against the dollar, it's sort of come back a wee bit this week. So we're back again. 20-day moving average breaching initially on Monday. Another big, not as big as the other two we've seen down candles, but we are under now. So Swissy coming back against the dollar. The dollar's weakened against its peers this week, but still remains bid. So we're at 90.40, .90.40. So we're under 90.50 where the 20-day moving average sits. and that's looking to move lower today potentially. So that closes like RSI moving down and rejected the 70 area and just ticking under the 50 area. 60 pips is a typical day's move for Euro Swiss. Yen very much in focus this morning. The Bank of Canada, the Bank of Japan, as expected. Why has it only got the press conference on here? It's so annoying. Oh, there it is. It was earlier, wasn't it? That's right. Sorry, but there, it did tell you the rate decision. There we are. As expected, virtually nailed on as far as the markets were concerned. Of a 25 basis points hike. What's tamed the sort of rally you would have expected in the Japanese yen was talk about stickier and hotter inflation than expected. They were quite hawkish about that. And Udia, who the governor, who's just completed his press conference. I was looking at, wasn't it? It just completed his press conference about an hour ago, still talking about the issue about housing and the issue about the inflation areas as well. So politically, things have calmed down a bit in Japan. Not so on its near neighbor South Korea, but things calmed down there, and the yen, as we can see, sort of benefiting from the expected rate hike. So again, we're under the 20-day moving average. That happened much earlier than the others, but we're supported by the key 155 level. So another consolidation zone. So the dollar still holds sway, but it's taken on the big strong rally we had to the dollar, particularly here we went to 158, didn't we? Plus. So again, a consolidation zone. So again, watch that clearly. On some of my end of day trades positions this week, or potential triggers watch lists, I should say, were obviously against the yen, and we were looking to go long earlier in the week. It didn't play out. It wasn't taken. It didn't actually complete the setup properly for an end of day setup. But earlier in the day here on Wednesday, it was looking quite positive. It didn't happen. It was just a brief break of it wasn't significant enough above the 21 EMA there, and then we were down yesterday and down again this morning. So looks like 155 will hold. We'll see what the US market makes of it when the big banks are open in the US and the US stock markets are open. But the 50-day moving average now absolutely key for this pair. But we're biased to the downside. Put some little trend lines on that. From this downside, so there's our trend line from our long trend line to the upside. So you can see we're testing that. This is from this low down in September, so nice little triangle form. So we could easily project lower this triangle, so we could move that distance lower when you're trading with wedges and triangles, my friends. But certainly that distance there, where were we? 156, 200 pips. Is that 200 pips? What am I talking about? Yeah, more or less 200 pips to the downside, and more if the momentum keeps going. So next big line is obviously the below that is the 150 itself, so 500 pips away. But initially, a good 100 pips run is on if the 50-day moving average breaks, and as you can see, we've tested it 1, 2, 3, 4, 5, 6, 7 times and it's held. So let's see that as we go into the rest of today and next week. Kiwi, a bit like the Aussie, has picked up this week. Monday's big candle breaking the 20-day moving average, triggering along on this strategy here. And that must have been a short, wasn't it, earlier in the week? Yeah, that last week that didn't work out. Oh, that's right. We got stopped out, didn't we, as it turned around. So that was the big roundabout we had on Monday, consolidated the rest of the week, and the lift up today. So into the 50-day moving average. So you can see the story here. The dollar's weakened, and then it's taken another leg higher so far today. See how these daily candles finish, but the 50-day moving average is coming into play across most of these majors, as you can see. And finally, euro and sterling. Euro 1.0495 with those good PMI data, and we're testing the hugely significant 105 again. 105 is here, so we've had a good day, and we had the biggest day of the majors on Monday for the euro, and here we've breached the 50-day already today. So a strong day today. There's the German and French PMIs feeding through to the upside. So the breakout occurred above the 104.50 50 zone from earlier this week, and off we go. 104 providing big support yesterday and this morning, and a big 100 pip rally. So euro on the front foot against the dollar, the weaker dollar this morning, and similarly sterling back over the key 124, having found support at 123. So these big round numbers playing out. First resistance as ever through the 123.50 area. 123.60 is actually where we got to, but another big lift for the weakening dollar today. So see how the day finishes. Caveat there on the hourly chart. We've moved into overbought area there for the sterling, and euro also in the overbought area as far as RSI is concerned. So if we get to 104.5, some perhaps profit taken, but it might also trigger some trade for the contrarians. So dollar weaker this morning. That should have helped. Gold this morning, yeah, indeed, 27.75 again this morning. Again, another one. Sorry, it's the hourly chart. Let's go to the daily chart. Another one. A strong week. Haven't breached the 2700 last week. Monday was a negligible day for gold, but it was Tuesday. Funnily enough, Tuesdays and Fridays can be particularly volatile for gold. I have no idea why, but my analysis going back years and years and years just shows that Tuesdays and Fridays are always ones to watch for the gold market. And I've never come up with any. Obviously, Fridays take people either taking usually positions off for the weekend or adding for the weekend if there's uncertainty kicking around. But certainly, we've had a sort of risk-off sort of bid on people moving into gold as they perhaps rotate out of the dollar. Crypto's had a similar sort of lift as we've seen, but that's been more volatile. But certainly, gold Tuesdays and Fridays. I don't know why. I just bear that in mind. It's just little things I've noticed over many years of staring at thousands and hundreds of thousands of charts. But anyway, you can see we're 27.75. It's looking very perky for the all-time high around 27.90, isn't it? As we move higher, and again, just still on your surfboard. That's been long from this 8th of January. It's had a great January. January can be good for gold bugs, and that's proven the case for 2025, isn't it? So off we go. Gold running again today, having a good day today. Perhaps not as good as Tuesday. We'll see what happens, see if there's some profit taken as the day rolls on, but we'll see. The other majors where we've got open positions here on our Discord group is we're fully invested on the, as far as the indexes are concerned, and they've been rallying nicely. We've been pulling our stop losses up all week, and we did the same thing last night on close. So the US 30, the Dow closed up yesterday again. We're currently trading, the futures are trading at 44,582. So entry on the 15th, our stop loss is now here. So we guaranteed all of that move there from 43,289 to wherever we are, 44,000. So 200 odd points, or whatever it is on the board there. We'll see how the week ends. We'll take some of that off for the weekend, but we'll see. All-time high took us to 45,000, didn't it, up there? So we'll see. Let's just look at that one. It's marked on there. There we are. There's our 45,000 high on our pro. So that's very much in the money. The FTSE is very much in the money from a tentative first target this week, but last week? Last week, and we've rallied all week, and we've been ramping up our stop loss. We're now currently at 8,500 our stop loss. I can't believe we're at these dizzy heights for the FTSE, but it is what it is. You don't have to understand why or accept why or whatever. Just follow the rules, move the stop loss up when you're trending nicely, and take the money off the table when it turns around, and accept your losing trades. Has always been my big mantra. So up we go. S&P all-time high yesterday. The world's most important stock market. The S&P 500 in America. America's 500 biggest companies. We're in the midst of the earnings season. Earnings have come in quite nicely. I've got my PropTrade sweatshirt on today. All-time high yesterday. We were up. We closed at 6,118, 6,118. Our previous high was 6,090. Or 6,000, yeah, 6,090. So strong day again yesterday, and we've had massive rally from this 15th. We've had one down day in the last one. Look at this. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9. We've had one down day in the last 9 trading sessions. It's likely to cool, but the trend remains set. If we hold 6,100 for close of business today, that will be a very, very strong week indeed. Obviously, the dollar, dependent on Trump's comments late last night, he was talking about the Fed interest rates and demanding that interest rates need to drop, and hence the weakness we've seen in the dollar this morning or overnight as well. But yields are still holding up 4.638. We finished the 10-year last night, and we're currently trading at 4.635. So we've hardly killed. So yields are still relatively big compared to the weakness we've seen in the dollar. But anyway, stock markets continue to move up. Earnings continue to beat relatively. There's some weak ones from United Airlines. I won't go into the stocks in particular because we've got these indexes that roll them all together. So the individual stocks I won't waste time talking about it. But certainly a strong day yesterday, 0.92%. The Dow was up in the cash market, and the Nasdaq was a bit of a laggard, up 0.22%. The Nasdaq itself, 21,850 this morning. Again, rallying quite nicely. Entry, stop loss above entry, so we're very much in the money on that. I nearly pulled it right up last night, but I left it between Tuesday's splitting Tuesday's candle, the top from last week, or the beginning of the month here on the 6th and the 7th of January. So anyway, that's also in the money. And the other big mover also remains very much overbought, but the DAX rallying really nicely as well from our entry on the 16th, all still nicely in line, a bit overstretched. All the oscillators you could put on your DAX charts look very overstretched. At 83, that is it's a significant high for the DAX, but we have been up here before. You can see here 85 and 83, so don't panic too much. And that was back in December 2023 when we were all the way down at 16,700 when we opened the new year this time last year, around about this level. So here we are at 21,000 and 21,500 is where my stop loss sits. Sorry, stop loss sits at 21,100. Next line in the sand, the big round 21. In fact, we're over 21,500, aren't we today? There we are. That's what that purple line is. So yeah, DAX all-time highs, Euro Stocks 50 all-time high, Euro Stocks 600 at all-time high. So indexes, stock markets being well supported in the new Trump 2 era. And finally, we did gold, didn't we? So are we done? I think we're done for the majors. Yeah. So let's just go back to the calendar. So plenty to get your teeth into today. We've already had better than, well, mixed, you could say, French and German PMIs, but the overall Euro area one is coming out as we speak. So let me just hang around that. We've just got to 9 o'clock. Let's just see what that number looks like for the Euro area as a whole. Let's take me back to a week rather than the day. So Euro still hasn't updated, even though it's 9 o'clock. Let's have a look at my. Yeah, the bring it up here. The Euro area as a whole remains pretty weak as far as manufacturing is concerned, but those better numbers out of Germany has helped lift that to 46.1 from 45.1. So that's a significant increase as well, much better than last month and better than expected. Services, however, remain flat, at 51.4, although in expansion mode, it's only just over the expansion mode area, isn't it? So 46.1 compared to 45.6 for manufacturing for the Euro area, and 51.4 compared to 51.4 in line with expectation, but weaker than last month because it was upgraded from 51.4, and manufacturing was downgraded from 45.2. I said 50, 51.4 to 50, so that's been upgraded. So it's sort of slipped a wee bit, but it's in line with what was last month and what was expected, really. So services needs a bit more of a lift. UK data in half an hour. Now, Miss Lagarde at Davos on the final day, and as I said earlier, the US data this afternoon, later on in the day. Services and manufacturing PMIs, and then the key University of Michigan sentiment figures, one for consumer and one for inflation after that. So take care, everyone. Have a great weekend. Our challenges are there for you all. Our evaluations, 2-step or 1-step, 1 phase or 2 phase. The rules are the rules. That's the real big appeal of prop trade companies, and at proptrade.com we really are here to help you. Some of these some very favorable conditions compared to many of our competitors. Check us out, compare us to others. We're really aggressively priced, not too cheap, because we're not at the cheap end of the market. We know what we're doing. Thank you 25 is still thank you 15 is still a coupon code that's working, so get yourself 15% discount off any challenge you'd like to do. I always say, 25,000, 50,000. You don't have to go, all in 100,000. It's $500. You got $500. Start with a decent amount, and I shouldn't tell you what to do, but 25,000, 50,000 gives you that. It's less than $200, and with 15% off that, cuts it down even more. Gives you the ability to take multiple trades. Those trades you mightn't look at, like the Euro Swiss and the Kiwi Swiss that we've bagged some pips on this week, with a bit of a wider spread than perhaps some of the more popular majors. But we're here to help, guys. That's my final mantra. Obviously, the fees refunded once you get to your funded account, and then the world is your oyster. Particularly, there's no ceiling on this, and anybody can learn to trade. It's about understanding yourself. It's not about listening to guys like me or understanding chart patterns, and all of that helps. As long as you listen to people who know what they're talking about and are quite genuine. There's so many fraudsters out there, just want your money, just want your fees for their course or their books or whatever it is, and then they disappear. We're here to help. We're here to, for a while, we're here to make sure you have the best possible trading experience. So take care, have a great Friday, have a great weekend, and we'll see you all on Monday. All the best, everyone. Bye-bye.